Good morning, ladies and gentlemen. This is Clueless 8, and this is February 16th, 2015. A shortened week starting out on Tuesday after a long weekend, Valentine's Day, and Presidential Day weekend. Let me get straight to the point here. All the forecasts and charts that I've shown over the last week to 10 days, and all the forecasts that have been put in place in the form of visual tactical precision charts, Clueless 8 trading charts, have all pretty much been hit at this point. I'm going to go over a couple of things here which I think are very important and a couple of observations that I see. We are in the midst of a massive volatility cycle. In between, there's random structured volatility, which I constantly keep on showing. My forecast on the bottom, which were around 1790 to 1810, around that level, was hit on the upper end around that 1812 S&P level. We bounced off hard on Friday. Substantial profits were taken, and I did mention or suggested, as I normally do, that we shouldn't keep large long positions open going into Tuesday. However, futures are up 21 points right now, and as far as I can see, we are hitting the upper end of that downtrend line. I'm sorry, we're in the process of retesting this downtrend line that we see and that I've drawn weeks ago. It almost seems like the world changes every day. The rumors about the Russian and Saudi Arabian oil pact is partly true. However, there are no production output cuts. It's simply a production output increase halt. Okay, it's a production freeze, but no cut. Now, that's not the end of the story. Just like in life, everything in life has layers of meanings, right? The point is that the way the markets are looking at things is they are actually talking. That itself is a positive. That itself should keep the oil, the floor on oil above that $25, $27 level that we saw just last week. Now, there's a lot of the invisible hand of a lot of mechanical, algorithmic, high-frequency trading programs, hedge funds blowing up, margin calls, institutional margin call sellouts that need to be settled. All that always happens in the background. There's nothing we can do about it. For now, it looks like, at least chart-wise, that we might have put in a tradable bottom. Now, that's not to say that we're not going to come down and retest the 1800 level and create a triple bottom, in which case it would be a quadruple bottom if you go back to the January 20th lows, and possibly hold. However, in this day and age of massive liquidity-driven, or I should say lack of liquidity-driven volatility, do not assume just because prices are green on the screen that everything is peachy again. Now, this is coming from a person who is generally bullish, and I'm still bullish on the markets. I still believe that we'll end the year on a good note, 2016. However, I'm a pragmatist and a tactical bear at times, as I've constantly shown on my suggested trades. So saying all that, let's get straight into the charts here. These are very simple, and again, they're all laid out and constantly put across for everyone's benefit. Anybody who followed them are doing very well, despite the volatility. It's a difficult market, I know that. I feel it, I trade it, I know it. So no one's running away from it. No one's saying, you can just go to sleep and then come up and everything just works out. But the fact is that, like my old saying, there is a method to the madness. If you focus on the madness, you're going to be out of this game, like many have. But if you focus on the method, you're going to be in the game, and you're going to be getting up every time that you fall. And that's the bottom line about life and about trading. So here we are in front of you, a chart that you've seen many times, S&P 500. Here's your downtrend line. I believe as we open the market, we are pretty much around here right now. So that's retesting the downtrend line. We are getting overbought on the hourly. You can see that. Very simple stuff. And we started to see the first signs of that on Friday when the market didn't give in and ended the day on the towards the highs of the day. Now keep in mind that if you measure from this point, this cataclysmic point where nobody wanted to touch the market and we were buying, or we were scaling in, I should say, that's the way to do it, all the way up here, that's almost 1,000 Dow points. That's 1,000 Dow points in less than 72 hours. So you got to think back for a minute here. You get 1,000 points in less than 72 hours. You fell like 1,000 points here within 72 hours. So obviously there's going to be some sort of minor rest. That's called a reset. Just insert a E in between the REST. That's a reset. Resets are good. And then we have to watch what goes on after that. If a reset becomes a deep slumber and a coma, then we go back towards the lows of the market. And it can happen, believe me. Now, the other thing to keep in mind is we're going to be opening up at these levels here. So obviously there's going to be, you know, a minor pause on a technical basis. That pause should hold. And again, we'll be up outside the Bollingers. And in my opinion, that pause should hold the 1870 to 1880 level. On the Think or Swim charts, they're much easier to see as to what those pullback retracement levels would be, and I'll try to show it as quickly as possible on this video cast. All right, so this is clear, right? Buy points, sell point. If you're a tactical trader, this is where you sell, take your profits, and you say, okay, let me see, you know, what we do now, because this is a formidable downtrend line here. So don't expect the market to basically just you know, waltz through here towards this, what I consider to be the ultimate pattern symmetry up here in the 1944 to 1950 range, where I think the market eventually is going, because that completes this pattern. I've shown this a zillion times, and especially since I started my service on April 15, 2014. It does happen. So if you want to do exact pattern symmetry, let's say you know nothing about charts and you got a 5-year-old to do this, then here's your level of supply, heavy selling here, right? The reversal candle, the bearish engulfing, all kinds of stuff. So you pull back from that, you test the downtrend line at around the 1880 level again, right? And that coincides with the left shoulder. So this becomes a right shoulder. And then you make a move up to 1950. Once we break that, that's a different story, but I'm not even going there right now. All right? There's a lot of hurdles we got to cross. So there it is. Now, let me show this again. Watch. Dragon bullish, like I said, would be a good possibility. That's exactly what's playing out right now. Should we get towards this level here? We pull back a little bit. This level should hold, because this is an important one. This was the breakout here, the reversal here. So you're talking about 1860, right? Remember we were talking about 1860? So there you go, 1860, 1865. From this point, we should attempt to break out. And if we do have a very solid breakout, we're looking at 1920, another number that I've talked about often and shown, around the 1920 level, 1920, 1930. And from that point, you should get a pullback, which should measure the left shoulder again back towards testing the 1880 level, which would be the breakout of the downtrend line right here, the red line. And this is the bullish scenario. And then you'd move from here. So all that, now you can see the pattern symmetry here. Here's your mirror pattern, right? Right there. Left side, right side. And then you hit this. And I think that's going to be the max move for now. In the meantime, on a short-term basis, we're already starting to pull back. Futures are up about 1975. I can see it on my 1-hour screen here that the 1-hour resets are in progress. We are looking at about E-minis at 1870. I'll show you on that in a quick second. So that's it. So that's your roadmap. Now, these zigzag roadmaps, you got to handle it. You got to manage it. Okay? And they happen in the middle of the night when you're sleeping. Look what happened. We were closed on Monday. The markets rallied like crazy. Japan was up a gazillion points. China rallied as if the world changed right away. The main reasons behind that, just so you know, was a huge liquidity pump by the central banks. The BOJ, the Bank of Japan, intervened to support the yen and to stop it from weakening. Okay, I'm sorry, strengthening. And you got the Chinese central bank, more importantly. That's the more important part, supporting the yuan and pushing it higher. Because remember, weaker yuan is, is not good, and a stronger yuan is good at this level of the market that we're in right now. Then the oil news came out. So there you go. So that's your picture on that. Now, if you look at the daily, let's look at the daily chart on the S&P 500 here. You're starting to see a pattern develop. I've shown this before, and I'm showing it again. Okay, you're starting to see a pattern develop. There is your pattern. Okay, this was drawn into that. So let me move these lines here. Downtrend lines are key. That's where we're opening up in. Bear with me. Okay. That was a bear flag from, well, let me remove that because that's more on a shorter term time frame. Here's your big reversal candle. Here it is. And here we are. We're going to be up 1,000 points from the depths of the market on Thursday afternoon. Not bad, huh? Not bad. That's just the way it is. It doesn't mean everything's going to go higher. A good question that's asked in the chat room sometimes. Why not text higher? Well, first of all, it was weekly options expiration. Second, they moved higher earlier. And it was primarily a day for the banks, as we can clearly see here. Goldman Sachs and JP Morgan, Bank of America, these are swing longs that are in play right now. They're looking beautiful pre-market. Goldman Sachs is up about $3. Bank of America is up another 2.5%. In fact, the largest mover. JP Morgan is up 1.1%. These are great. In the meantime, Deutsche Bank is down 3.5%. Well, that's not my play. So there we are. If we break out of this, so let's draw this pattern here. So this is what I'm looking at, right? This is what I've kept on saying is the first stage of the market. There's your pattern symmetry. All right. So here we go. Massive volatility up and down. Then it starts to fall into place. So best case scenario, let's say going into the end of February, and keep in mind that we have monthly options expiration, which is generally tagged as a bullish event for technical reasons this Friday, and that's only 3 days away, right? So any type of large resets here or pullbacks, in my opinion, should be nibbled at. Overnight positions should always be curtailed to moderate to small positions because we have no idea what's going to happen overnight. So here we are. Best case scenario we're looking at is the 1980 level. A retest 1960 to 1980. Retest of the downward sloping moving averages, and we'll see what happens after that. In the meantime, this is the daily chart. As you can clearly see here, we are turning. There's no question about it. It doesn't mean that we can kind of move sideways and confuse the heck out of everyone. This candle is very positive. It doesn't mean that we're not going to have red days like this. Keep in mind, tomorrow is Red Wednesday. There's a good possibility that we're going to end up down 100, 200 points. Be careful. Quick picture here. I'm not sure why it's not showing up. Bear with me. There you go. All right. So you can see here. Okay, there we are. Okay, let's just focus on this here. All right. So this is where we are. We have a. Let me draw this right in real time. Just got a few minutes. Oh, I got 30 seconds. Okay. So best case scenario on the E-minis is retest of the downtrend line. In my opinion, that's if it happens towards the latter part of the week. Here you have a rising wedge. You can see that. Rising wedges fall. What am I looking at as a pullback? I am looking at a retest of the rising 50 moving average on the hourly charts. So on your E-mini charts, you're looking at 1870. Now remember, I'm not a futures trader. I just use it as a proxy to manage my trades. And believe me, people who've done that, they've done well. So this is what I'm looking at. A breakout below that brings lower levels into play.